Welcome back to Investing Talk Podcast. This is where you give us the source material, articles, reports, maybe even your own notes. And, well, we jump in and pull out the really key insights for you. Think of it as your way to get up to speed fast. Today, we're looking at BloomZ. They're in the entertainment scene over in Japan. We've got stock analysis, a due diligence report, some recent updates on finances and strategy, all provided by you. Our goal here, figure out what BloomZ actually is, what its current situation looks like based only on these sources, spot the risks and maybe opportunities mentioned, and, bail it down to what really matters for you.
And it's an interesting one. The sources paint a picture of a company in a pretty unique and fast-moving part of entertainment, mixing digital stuff with more traditional services.
Okay, let's unpack that. Based on these documents, what does BloomZ actually do? What are their main business areas?
So the sources point to three main things. First, audio production, specifically for animation and video games. Second is VTuber management. That's using those virtual characters, with motion capture for streaming, content, that kind of thing. And third, they're into education voice acting workshops and training services.
That is quite a mix. Audio, virtual talent, and training people up. The sources suggest that combination might give them a bit of an edge, maybe, in their specific niche.
That seems to be the idea, yeah. A blend you might not see everywhere else.
And who's behind it? Who founded the company?
According to the info we have, it was Kazusa Asaki back on October 17th, 2017. And he's still the CEO.
Okay, let's get into the numbers now, based purely on the sources you sent over. What do they tell us about BloomZ's financial health, particularly the recent picture?
Well, the latest revenue figure we have is for fiscal year 2024. It came in at $1.5 million. Now, that's actually a big jump, 71.5% up from the year before, which was about $896,000. And the drivers mentioned were things like sound production, talent management, their internet business, and some animation committee investments.
Okay, so revenue growth looks pretty strong then, over 70%.
It does, but, and this is a huge but highlighted in the sources, operating expenses went through the roof.
How bad?
They jumped from around $1 million to $2.8 million. In the same year, revenue grew.
Whoa, so costs grew way, way faster than the revenue did.
That's it. And the result, a net loss of $1.5 million for FY 2024. Compare that to the $110,000 loss the year prior. It's a massive increase in losses. The sources specifically call out the really negative margins because of this, like a profit margin of minus 100.5% and operating margin of minus 171.6%. It just shows costs are really outstripping revenue right now.
Okay, so that's the main financial story coming from these documents. Top-line growth is there, yes, but it's being swallowed up, and then some, by soaring costs leading to much bigger losses. That feels pretty central. What else did the sources show on the financial side? Or maybe what didn't they show?
Well, that's another point raised in the due diligence source. Getting a complete picture is hard. A lot of the standard stuff you'd look for, EPS, PE ratios, debt to equity, free cash flow, ROE, price to book, they're listed as, unavailable or just not disclosed in the public summaries as of May 2025.
Okay, so limited visibility on some key metrics.
Right. We do see stockholders' equity was reported at $3.38 million for the last fiscal year, and the sources also state clearly that the company doesn't pay dividends.
So putting together a full financial health check based only on this public info seems tricky, just like the sources imply. Given those numbers, especially the losses and margins, what other big risks did the sources highlight?
The biggest one, the one that really jumps out in the due diligence report and the updates, is the auditor's statement. They express substantial doubt about BloomZ's ability to continue as a going concern.
Right, that phrase, going concern, always catches your attention. Why did the auditors raise that flag, according to the sources?
The documents link it directly to challenges in getting new customers, signing new deals that actually bring in revenue, and critically, the need for more funding, additional financing. The sources are pretty blunt. If they don't manage these things, their ability to keep operating sustainably is at risk.
Wow. Substantial doubt about ability to continue as a going concern. That's not something auditors say lightly. Why is it such a significant red flag when you see that?
Because it's the independent auditors saying, look, based on our review of their financials and the situation, there are serious questions about whether this company can actually stay afloat for the foreseeable future. It's a formal warning baked right into the financial reporting process. The sources mention it's in their SEC Form 20F filing. It signals the potential for real trouble ahead if things don't change course.
Understood. Serious stuff. Any other risks called out?
Yes, a few others. The small market cap is mentioned around $1.93 million. That makes the stock likely more volatile and harder to trade, less liquid. The ongoing losses and the pressure from high operational costs are obviously persistent risks, too.
Mhm.
And interestingly, the sources mentioned manpower shortages in FY 2024, which kind of held them back a bit. So successful recruitment is another factor to watch an execution risk.
Okay.
And then, the usual external risks are noted too, general market ups and downs, and potential changes in regulations for the entertainment industry.
It definitely sounds like a challenging environment for them based on these sources.
Yeah.
Were there any strengths mentioned? Anything positive to maybe balance out these risks?
There are some points, yes. The sources describe their services, particularly the VTuber management and the voice acting education, as being potentially unique or innovative. That could help them attract specific niche markets.
And that brings us to something the sources spent some time on, this recent strategic alliance. What's that about, and why might it matter for BloomZ?
Okay, so around May 22nd, 2025, they announced this alliance with a company called MNXT Holdings. MNST owns a chain of trading card stores called Ryusei no Arashi.
Trading cards and VTubers. How do those connect?
Well, the goal described in the sources is to blend BloomZ's digital expertise, the VTubers, the sound production with MNXT's physical stores, create interactive experiences for customers. Things mentioned include monthly promotions featuring BloomZ's talent in the stores, setting up event spaces like maybe open radio studios inside the shops for live events with the VTubers and voice actors.
Interesting. Bringing the digital characters into the physical stores.
Exactly. And also helping MNXT with their international expansion plans. The potential upside, as noted in the sources, is boosting fan engagement, maybe opening up new revenue streams through these kinds of experiential marketing events tied to store traffic, and potentially giving BloomZ more brand visibility, maybe even internationally.
That does sound like a creative way to try and bridge that online-offline gap, leveraging what both companies have. The sources seem to position this as a potentially significant strategic move. So how did the market react, especially to this alliance news? What have the shares been doing, according to these sources?
Well, the stock price mentioned around May 22-23 was low, about 0.134 cents, but it's described as being very volatile. But there was a noticeable short-term jump. The sources highlight a surge of around 58.58% in the week leading up to May 23rd.
Wow, nearly 60% in a week.
Yeah, and the reports directly suggest this was likely linked to recent announcements, probably including that MNEXT alliance. There was also a smaller recent uptick noted, about 3.16% in the 24 hours before May 23rd, putting the price near $40.55.
Okay, so a big recent bounce, which the sources tie to that partnership news.
Correct. And the sources provide this crucial context. You have to see that against the backdrop of the longer term. Over the past year, the stock is down massively, something like 94%.
Oof. Okay, so the recent pop is after a very steep fall.
Precisely. It reflects those bigger, longer-term challenges we talked about. The sources also mention high volatility around 64% and a beta near 1.29, meaning it tends to move more than the overall market.
Right. So a volatile stock with a recent positive catalyst, but still facing major headwinds. What future catalysts or risks did the sources say you should keep an eye on?
Upcoming catalysts could be things like the next earnings reports. Will they show any improvement in those financials? Or maybe news of other partnerships or new service launches. On the risk side, it's really reinforcing the main themes that going concern warning is paramount. Then there's the market volatility because it's a small company with negative financials, initial manpower issues impacting delivery, and, regulatory changes down the line. Opportunities really center on whether that MNXT partnership delivers and if they can grow the VTuber side of the business profitably. The sources didn't give us direct social sentiment data, but that price surge does suggest some renewed market interest. Although, as the sources might imply, you always have to be cautious with small cap stocks where news or rumors can cause big swings that might not last.
Okay, let's try and wrap this up for you, the listener. Based on this deep dive into the sources you provided, what's the core story of BloomZ right now?
Okay, summarizing from the documents. BloomZ is in this interesting niche audio production, VTubers, voice actor training in Japan. They saw really strong revenue growth last year, which looks good on the surface. But that growth came with a huge surge in costs, leading to much bigger losses. And those losses are serious enough that the company's own auditors expressed substantial doubt about their ability to keep operating. That's a major red flag. On the positive side, there's this recent strategic alliance with the retail chain MNEXT. The idea is to create these hybrid digital physical fan experiences. And that news does seem to have given the stock a significant short-term boost, according to the sources. So overall, the picture from these documents is potentially innovative services in a cool, growing market, but facing really fundamental, high-stakes financial problems. The going concern issue looms large. The alliance is a potential opportunity, but it's playing out against a backdrop of major long-term stock decline and ongoing operational cost pressures. High risks, basically.
If someone is trying to understand this company, just from these sources, what's the single most important point you think they should grasp?
For me, it's the clash. The tension between their innovative business model in a sector like VTubers that feels very cutting edge, and the harsh financial reality underlined by that auditor's warning. The need for new contracts, new funding, it's critical. That contrast, that potential versus the immediate financial peril, that's the heart of the story these sources tell.
And why should you, our listener, care about a company like BloomZ? What's the relevance here?
Well, understanding a specific company like BloomZ gives you a window into these evolving digital entertainment trends, especially in a key market like Japan, how talent management is changing, the rise of virtual personas. But maybe more broadly, this case, based purely on the sources, is a really clear example of the huge financial hurdles that even innovative smaller companies face. Trying to scale up, trying to manage costs in high-growth, potentially high-cost areas, it shows you both the exciting potential and the very real financial dangers side by side.
That really was a fascinating look into BloomZ, pulling everything directly from the source material you sent us. Remember, if you want to dig even deeper, the sources suggest looking at the company's own investor relations materials, public filings like that Form 20F we mentioned, and financial news outlets that cover Japanese stocks, particularly in entertainment or small caps. So here's a final thought for you to chew on, building on what we found in the sources. As the line between digital and physical entertainment keeps blurring, how does a small, potentially innovative player like BloomZ actually fund the high costs of developing talent in tech? How do they capture their niche before bigger companies move in, or before those financial pressures like the going concern risk become truly overwhelming? Something to think about. Thanks for joining us for this deep dive. And hey, if you found this useful, please do consider subscribing to Investing Talk Podcast, give us a like, maybe leave a comment. It really helps us out. We'll see you next time.